Wall Street declines for the third straight day as Fed Chair Jerome Powell quashes hopes of having reached the end of the hiking cycle. In his testimony to the Congress, he says the fight against inflation has a long way to go and further hikes are likely as the Fed moves to bring inflation back to its 2% target. Markets in China, Hong Kong and Taiwan remain shut on account of a trading holiday. The Nikkei and Korean Kospi trade mixed, while the SGX Nifty indicates a lower start for the Indian market. Crude rises to $77 a barrel, hitting a two-week high, and expectations that the tightening global grain market could lower biofuel blending and raise the demand for oil. Lower U.S. inventories also aid the up move. TCS expands its strategic partnership with UK's Nest, signs an $840 million contract for an initial duration of 10 years. The deal could rise further to $1.1 billion if extended to 18 years. And US President Joe Biden and First Lady Jill Biden host a private dinner for Prime Minister Modi at the White House ahead of a ceremonial welcome later this evening, a day after chipmaker Micron's $2.7 billion investment in India gets approved. CEO Sanjay Mehrotra also says he is very impressed by the Prime Minister's vision for India. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this morning. There's a lot to track in terms of news flow that has come through. But for the markets, at least for the Asian markets, there's not much coming through because most of them are shut. So China, Hong Kong, Taiwanese markets, all of them shut on account of a trading holiday. The ones that are trading, you have Kospi seeing a gain of around 0.5%. So that one's holding up quite well. The Nikkei market similarly down a little bit, not too much of a cut, but around 45 points lower for the Nikkei markets. The SGX Nifty will also come up for you, and it is indicating that the start for our own markets will be a little bit weak. Around 40 points lower is where we're at on the SGX Nifty right now. So that's what's happening across Asia. Not really too much coming through in terms of cues. But let's talk about the US right now, because Wall Street closed lower for the third straight day. We saw the Dow lose over 100 points. The S&P 500 was down 23 points, like you can see on your screen. It was actually the worst day for the S&P in the month of June, and the Nasdaq Composite was actually the underperformer of the day. It closed with losses of over 1%. So yet another weak session in the US. In some more news from the US, Alphabet and Microsoft were both under pressure after the former accused Microsoft of unfair practices in the Azure cloud unit. In a letter to the Federal Trade Commission, Alphabet has alleged that Microsoft used unfair licensing terms in order to lock in client and exert control over the cloud computing market. In more stock-specific action from the US, we also had Intel, which was the other tech stock, which saw quite a cut coming through. It was down 6% at one point after the company's update on its plans to become a chip manufacturing company. There's already heated competition in that space, so that is what really weighed on shares of Intel. So that is what is coming through in terms of the US markets. But let's focus on the big cue that we've all been talking about, which is that the Fed Chair's testimony before the US Congress. So Jerome Powell reiterated that the central bank's tightening measures are yet to take full effect, and he did hint at more rate hikes as well by the end of the year. Let's listen in to some of those comments.
I guess I would say this economy is very strong, and what's driving it now is just a very strong labor market. There's still significant demand for workers. There are more job openings than there are unemployed people. Wages are moving up, and that's really what's driving the economy forward. People's disposable incomes are coming up. Inflation is moving down gradually. The thing that troubles people, and I think the thing that accounts for the surveys you see, where despite a historically strong labor market, people are still concerned about the economy, it's really inflation. So this is our job, is to bring inflation down. The way we do it is by raising interest rates. And while that can be painful, what it does is it gradually slows down demand so that supply and demand can get back into alignment, and so that we can have inflation running at 2% and people can get on with their lives and basically not have to think about inflation. The level to which we raise rates is actually a separate question of the speed with which we move. Earlier in the process, speed was very important. It's not very important now. We were at 75 basis points for several meetings, then we were at 50 basis points, then 50 basis points, 25 basis points at 3 consecutive meetings, and now we're moderating that pace. So we only have one interest rate to raise or lower. It's not true, but mainly one main interest rate to raise or lower, and it applies to everyone. But I would say that inflation hits LMI communities and people generally at the lower end of the income spectrum much harder than people in the middle or at the high end, because high inflation can get you into trouble right away if you're living on a fixed income just to cover the basic necessities. So it is for the benefit of those people that we must get inflation under control. It's for the benefit of all Americans, but particularly for those people. And we keep that in mind as we are strongly committed to getting inflation back down to 2% over time.
All right, that is the Fed chair telling us what he has said before as well, that they are not done hiking rates at all. And in fact, we should expect more before the year is out. So that is some important comments coming in from the Fed chair. But let's also listen into what Jared Bernstein, chairman of the Council of Economic Advisors, had to say about the wage gains in the U.S. economy in proportion to inflation. Hear him out.
The president has consistently, and be happy to provide you and yours with evidence of this, has talked about real wage gains, particularly over the last 6 to 7 months, but most recently, and you can look at this on his comments when the last inflation report came out, on a year-over-year basis. This is actually the first time in a couple of years, this is with the May inflation print, that year-over-year inflation rose less than wages. So wages grew 4.2%, inflation grew 4%. 2/10 real wage gain. Now, I'm not saying 2/10 is gangbuster real wage growth, but it is real wage growth, and that's been that's a fact over the past year.
All right, that is some important opinion coming in, but let's also bring you the final update on our global market wrap this morning. European markets ended Wednesday's trading session lower, so we had the French CAC index, which was down around 33 points. The DAX also saw quite a slip. It was almost 90 points lower, and the FTSE closed with a 10-point cut. So yet another weak session for the European markets as well. In more from there, the sterling also fell against the US dollar after the UK reported a hotter than expected inflation print. So inflation in UK, this is for the month of May, came in at 8.7%. This is on a year-over-year basis. If you look at it on a month-on-month basis, there was a rise of 0.6%. If you look at the core inflation, that accelerated to 6.5%. This is from the 6.2% which we had earlier. So there's been a jump over there. And this comes ahead of Bank of England's policy decision, which is due later today. And you know, like we've been mentioning, the BOE is widely expected to raise rates this time around, and the expectation is of a 25 basis points hike. The other central bank in focus today will be the Swiss National Bank. They are also expected to raise rates by 1/4 percentage point later today. So that is what we're tracking in terms of all of the global action. But with that, we're going to get into a short break. When we come back, we're going to take you through how all of these cues really impact our own markets and some of the individual domestic cues you should track as well. Welcome back. You're still tuned into Power Breakfast. And as promised, we have all of our research team here to fill you in with the trade setup and all of the individual stocks that you should track today in terms of trade as well. So we have Mangalam, Sonal and Surbhi all joining us now for exactly that. Guys, a very good morning to all of you. Sonal, let me come to you first. It is another day of a week handover from Wall Street, but take us through everything we should watch.
Oh yes, it is a week handover, third continuous trading session in which we did see some fall in the US markets, and this time it was led by commentary coming in from Jerome Powell, where he indicated that rate hikes could happen again at the end of this year, indicating that the cycle of rate tightening is not over yet, and that is something which worried the street. So that's why we saw that fall that we saw in the US markets in yesterday's trading session. Nikkei was down 1.7%, which was the worst intraday fall that they've seen since June 7th. As far as the Asian markets are concerned, largely shut in trade today. We have the Taiwanese index, China and Hang Seng, all of them shut for a holiday. Nikkei and Kospi are higher in trade, but not major cues that we are getting from there. But the SGX Nifty is indicating that the start for our own markets, well, that could be in the red, down by around 30 points as we speak. If we talk about England, Bank of England, they would be announcing their rate decision today. Important level to track there as well, and track the inflation numbers as well. If we talk about our own markets, well, market posted record close yesterday. It was led by a majority of these blue chips, HDFC Bank, TCS and Reliance. So Sensex, Nifty and mid-cap index, they ended at record closing highs. In fact, the mid-cap index posted record close for the 12th straight session. Major buying was seen in financial services, especially NBFC. So that is a space to track as well. Now, on the immediate level, 18,800 is the support, and the immediate resistance on the higher level is at 19,000. If the Nifty crosses that mark, there could be some more buying from those levels. So important levels to track. Nifty mid-cap 100 and small-cap 100 also gained for the 8th straight session. So broader markets, they continue to do well. But on the benchmark, there could be some pullback today on the back of weak cues from the US markets.
Oh, absolutely. The global setup just doesn't seem to be helping us get to those all-time high levels on the Nifty. But Sonal, thanks a lot for all of that. Let's also talk about the individual stocks you should watch. We have Surbhi here with the entire list. Surbhi, TCS top of mind.
Yeah, TCS is on the top of the list. Now it expands its strategic partnership with Nest. The contract value for 10 years is around £840 million. And if it is extended for the 18-year tenure, it will be £1.5 billion. Next on my list is Delivery. Carlyle is going to offload around 2.5% stake for $86 million. LTI Mindtree, the company launches Canvas AI, an enterprise-ready generative AI platform. All Cargo Logistics, they have released their monthly update for May, and the LCL volume was down about 5% on a year-on-year basis, and the FCL volume was down about 11% on a year-on-year basis. And lastly, Shyam Metallics, the company commissions production capacities in West Bengal, and they have an incremental capacity of 1.65 lakh tons per annum of sponge iron capacity.
Right, Surbhi, thanks a lot for taking us through that entire list of stocks. Finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Hi, Mangalam.
Good morning. So the SGX Nifty, for starters, is indicating a downtick, and that may not particularly be a bad thing, because we've noticed that, over the last few trading sessions, all the dips on the Nifty have been bought. However, what's worrying is that over the last, on 3 occasions in the last 1 month itself, the Nifty has gone very close to the record high and thereafter seen a bit of congestion. So between 18,850 to 18,900, there is congestion. And this congestion perhaps is on account of the weakness in the Nifty Bank, which is facing technical hurdles at the 20-day moving average. For instance, yesterday's high on the Nifty Bank was 43,947, and that compares with the 20-day moving average of 43,974 itself. So that's something we'll have to watch out for. But the good part is that the HDFC twins have finally come to the party. Yesterday they did well, and if they continue to do well, then maybe it would be easier for the Nifty to go ahead and cross those all-time highs. So HDFC Bank and HDFC Limited were the key outperformers in yesterday's trading session and the key contributors on the way up as well. In terms of cash market flows, just watch out for DIIs and FIIs, both of them together putting around 4,500 crores in the cash markets. But that's largely on account of a lot of the large trades that took place. So we'll have to account for that as well. In index futures, both the Nifty as well as the Nifty Bank open interest saw a bit of a decline, telling you that we did see some bit of unwinding on both the long as well as the short side. And that's what the FIIs did. They unwound around 2,000 long contracts. They unwound 4,000 short contracts, as a result of which their long exposure still even Stevens at around 52%. It is weekly options expiry, and we did see index options selling by the FIIs, both calls and puts. a lot of straddles being written, which is both a call and a put together. And where are those active levels? You have 18,900 call. That saw a fair amount of open interest addition, 30.5 lakh shares added for a premium of 22 odd rupees. And at the lower level, 18,800 put was extremely active as well, added about 51 lakh shares. Now, those who've written this 18,800 put and 18,900 call, they're hoping for a range between 18,750 to 18,950 itself. And those who've written just this, option writers have positioned themselves for an 18,780 to 18,920 range. A bunch of stocks that we need to watch out for. PNB, that's entered F&O ban. And yesterday, as we pointed out with the stock move and the open interest decline, that there could be a case for India Cements and India Bulls Housing Finance to come out of the F&O ban. And that's precisely what has happened. The question is, it is weekly options expiry. HDFC Twins are doing well. Do we take another shot at a record high today or not?
Well, only time will tell. Mangalam, thanks a lot for getting us all of those cues. We are going to wait by and see if we do manage to get past that level today or not. But with that, I also want to bring you a quick check on the commodities, because we did see crude prices hit 2-week highs above $77 a barrel in yesterday's trading session. This as U.S. corn and soybean prices hit multi-month highs, raising expectations that crop shortfalls around the globe could actually lower biofuel blending and increase oil demand. Prices are also holding on to those levels this morning, like you can see, around $77 a barrel. There's also been an unexpected drawdown in U.S. crude oil inventory. So they fell by around $1.2 million for the week and ended June. This is for the week ended June 16th, and defying expectations of a rise in crude stocks. So that is also something which has aided this up move that we have seen on crude prices. With that, it is time for a short break on the show. But when we come back, we're going to get you all of the highlights from day 2 of Prime Minister Modi's visit to the U.S. Stay tuned. Welcome back. You're still tuned into Power Breakfast, and let's now get you the latest on Prime Minister Modi's visit to the United States. This is day 2, and US President Joe Biden and First Lady Jill Biden welcomed PM Modi to the White House on his second day of the visit. And Prime Minister Modi and the First Lady visited the National Science Foundation in Virginia, where they were briefed on career and training programs, while educational partnerships between the two countries were also highlighted. The Prime Minister also met top CEOs including Sanjay Mehrotra of Micron and H. Lawrence of General Electric. President Biden also hosted PM Modi for a private dinner ahead of a much larger state dinner scheduled later today. And the two leaders are expected to discuss deepening their countries' defense ties as well as partnerships in technology and expanding cooperation on key global issues, including climate change as well. In fact, one of the many CEOs that Prime Minister Modi did meet on his second day of his US visit, like I was pointing out, was Sanjay Mehrotra, who is the chief of Micron Technology. Remember, this is the company that made headlines for becoming the first firm to get a cabinet approval under the semiconductor scheme. So let's listen in to what he had to say post the meeting with the Prime Minister.
Had an excellent meeting with Prime Minister Modi. Very impressed with the vision that he has for India and the advances that India is making. We discussed a wide range of topics, and we really look forward to greater opportunities in India. Micron is a global leader in memory and storage, and we are a supplier for memory and storage in all end markets, from data centers to smartphones to PCs, and today really fueling the AI engine as well. So we are excited about the opportunities that exist for the future of memory and storage. And again, congratulations to Prime Minister Modi on his excellent visit here. So far, it's going great from my understanding, and I wish him and India all the best.
All right, that is Micron Sanjay Mehrotra. But with that, we're going to have to wind down on this edition of Power Breakfast with the news that, like I said, most Asian markets are shut, but the ones that are open are also not doing so well. Nikkei is in the red, Straits in the red, and Kospi is the only one which is holding on to an 8-point gain right now, so not much coming through from there. The SGX Nifty has slipped further. It is now down 45 points on the SGX Nifty. Thank you for tuning into Power Breakfast. We have Bazaar Morning Call up in 2.